Welcome to Currency Cast. How should corporate treasurers manage the FX risk in business-to-business transactions? What is the future of B2B payments? Welcome to Currency Cast. My name is Agustin McKinley. I'm the Senior Financial Writer at Cantox. I'm your host. In this episode, we have the pleasure to welcome Enrico Camerinelli, a Senior Research Analyst specializing in supply chain finance and B2B payments. He's also the author of the book, Measuring the Value of the Supply Chain. Enrico, a very warm welcome to you, and thank you for joining us today on Currency Cast.
And thank you for the opportunity of having me in your interesting podcast.
All right, Enrico, can you start by introducing yourself to our audience, please?
Sure. I'm Enrico Camerinelli. I'm based out of Italy, and I'm a strategic advisor and senior research analyst with Datos Insights, an international global research and advisory company. And as Agustin said, my areas of coverage are mostly in the business-to-business space. I have a corporate background, and so that's why I bring my experience to the table.
Well, that's great, Enrico. It's great to be speaking to an expert in foreign exchange risk management in the context of B2B transactions. As you know, it's a major area of interest to us at Cantox. Now, you've just published a report or authored a report called B2B multi-currency processing methods. Can you tell us a little bit more about this report, Enrico?
Yes, the notion of business-to-business, multi-currency is quite important. I have to say that I got inspiration after following, Agustin, one of your podcasts. And so I started wondering, if I am, a banker, how can I better service my corporate customer? And if I'm a corporate user, how can I best execute my, currency conversion processes? And so I just wanted to see what the market offers out there. So under the perspective that, and I think we'll be touching this later on, that when we look at FX conversion, to simplify, it's not just a one-off. It's not just the event of turning a currency into another, but this is part of a longer, journey. And so I wanted to help our bank and corporate clients to understand what are the options out there in terms of technology solutions, but also in terms of practices and what needs to be done in order to execute at best this very important part of our treasures business.
Right. I think we're on the same page here. At what Cantox, we like to discuss the whole foreign exchange workflow, all the way from pricing with an FX rate to then the assessment of the exposure to be hedged, the trade phase itself, and then, as you mentioned, the conversion, and even then maybe the swap executions and all of the reporting and accounting. So it's an entire process that needs to be managed. Enrico tells us what's at stake when we discuss the foreign exchange risk in business-to-business transactions.
Well, so the biggest risk is not realizing that, again, FX is an overarching flow. It's a long journey. So the biggest risk is just focusing or thinking that someone can take care of that, while the big portion, the big things are resident somewhere else. So if FX risk is not properly managed, especially in business-to-business transactions, where you have two counterparts that are very complex, you have many personas on both the sides of the business. The biggest risk is not making the best use of your liquidity. And when I speak to corporate treasurers, they tell me that nobody, loses his or her job if they don't make that extra basis point, but they definitely risk of losing their job if they don't make the best use of the liquidity of the company. And so making sure that you don't keep idle, currency or idle, cash unutilized. So keeping too high security buffers, for instance, can be a big risk, because that is, a cost for the company. And the other thing, and I do believe that this is also something we will be touching upon later, so I don't want to cover everything now, is the risk of missing the opportunity to better negotiate with clients and suppliers, so with your business-to-business counterparts. And again, as I said before, and I'm even more convinced of this, is that the big risk is that considering FX as I've been hearing many times, like an unavoidable pain, sort of a cost of doing business, would force, and this is where the risk comes, in just seeking for the least cost, or doing a least cost basis analysis, or looking for solutions that are cheap, without considering that the risk is that just looking at the small portion, or having that limited view of what B2B FX is missing the big picture. So it's not so much about technology, it's not so much about FX, let's say, techniques, but it's rather missing the big picture, and that is the biggest risk if not doing it well.
Right. I think we're on the same page, and it's really interesting that you make that connection between foreign exchange risk management and liquidity management. We'll come back to that in a couple of minutes. Enrico, when you analyze FX risk in the context of, say, transactional risk, do you mostly consider the time lapse between the moment the firm order is agreed upon and the settlement, or maybe perhaps between the moment the invoice is issued and the settlement, or do you consider both?
You know what? This is where really I hope that people really, how could I say, trust in my good faith. So even though this is, a session organized by Cantox, I'm referring to the Cantox, let's say, model, moving from pre-trade to execution to confirmation down to netting and settlement and reconciliation as a real, let's say, workflow, I would say, that really should lead. And I make this, clear also in that report you were mentioning before, that you might have as a treasurer the need of just looking at a one leg of this longer journey, but at the end of the day you need to have the full picture. And so also when coming to optimizing your FX conversion cycle, making sure that you have all the things in place. You might still be working with your Excel spreadsheets, doing something that it's inefficient, but just because you are optimizing one of the one of the sort of steps that you feel as a treasurer being most important for your specific needs. So I would say when it comes to your transactional risk, you have to look at the big picture, but remembering that the forest is made of trees, and so making sure that you're looking at the right trees and not chopping the wrong one.
Right. Yes, really interesting. Now, Enrico, the other day we had the opportunity to discuss the foreign exchange headwinds faced by two global companies, very successful ones, Netflix and Swatch. And now we move to maybe away from the transactional risk, and we consider the forecasted exposure.
Mm-hmm.
And in the case of Netflix, they consider their exposure to currency risk in the shape of rolling forecasts, right? So for budgets across a number of periods, whereas Swatch is more interested in a particular campaign period, a particular budget period.
Mm-hmm.
Do you see differences in the way currency risk should be managed in the context of those different types of forecasted exposures?
The answer is usually the answer that I hate, but that I have to use now is, it depends. I mean, rather than it depends, I would say it's important that whatever technology, whatever approach is taken, is made there with the understanding and with the acknowledgement that long-term cash flow exposures require a different type of FX risk management. So what really matters is considering some, let's say, key points that will avoid making mistakes or making the wrong steps, whichever then the particular technique is used. One, for instance, is the cash flow hedging. So you want to stabilize your financial performance, and so you want to make sure that you have a proper hedging strategy. But the hedging techniques are not a one, as they're not a one solution for all.
Right.
It must be based on the nature and especially on the duration of the exposure of the cash flow. So you have to be adaptive. In order to do this, as a treasurer, or somebody works in this, following these processes, then you want to make sure that you have the proper, let's say, metrics or measurement system. So being able to identify the underlying exposures from your forecast, your cash flow forecast, making sure you know how to analyze them, and determine the value at risk or other metrics for the exposure of FX. And then when it comes to being able to handle, to analyze, and to measure, and to decide what are the hedging techniques you want to use for the particular duration or nature of exposure. The conundrum now is, should I, especially if I'm a multinational organization, should I centralize? Should I decentralize? Right. What I see in general is that you need to have, let's say, like a centralized, let's say, policy, common rules. You also might want to centralize funds, and this is where you need to have a proper system that allows you to distribute the funds properly. But the more you're able to at least centralize the logics, the policies, the rules of engagement, you can then apply your multi-currency notion of pooling, or optimize the sort of intercompany positions, and in order again to release idle cash and optimize your exposures. So this centralization, so at least centralize the logic of the rules and decentralize the execution, is also related, again, in what are, according to my research, the best practices. You're also having a risk management policy that, instead of being widespread and each department units follows its own, even though I do appreciate that you might have regional or domestic or some also national regulatory requirements that are necessary, but you need to have sort of a central governance, and then you can deploy and adapt locally as much as you can, or as much as necessary, not as you can, I would say, as much as necessary, but always making sure you have a sort of a centralized rules of engagement established by your central treasury. Right.
As we are also fans in general of FX centralization, but it's, as you mentioned, in the context of the wider trend towards more efficient cash management. And we go to welcome a little bit to the Netflix swatch comparison there. I was really interested in the example of Netflix having to deal with currencies with different interest rate differentials to their functional currency. And of course, as you well know, for any currency manager, that to be able to manage those differences between spot and forward rates, either in hedging or in pricing, is such a vital element. In the case of Netflix, if they sell series in euros, like Class Act about the life and times of Bernard Tapie, they will have favorable forward points. In other words, the euro trades at a forward premium against the dollar. But if they sell other series, say in Brazilian reals, then they will have those forward premiums in against there, or they would be unfavorable.
Yeah.
The question is, beyond the technical aspects, do you think that treasurers should take more advantage of all those opportunities in either for pricing purposes or hedging purposes? Do you think there's sufficient awareness of all the possibilities of managing this relationship?
I think that this actually is where the treasurers can really take advantage of their, let's call them technical skills and knowledge in something that rather, tends to be quite obscure to those who are not on a daily basis looking at these, FX conversion strategies and policies and techniques. We know that corporate treasurers expect to be more or sort of working to be more strategic in their advice within their organizations. And so if the treasurers want to move away from their sort of inner cubicle and making sure that they can contribute to the benefit of their organization, as I said before, nobody's looking how much you are saving in terms of basis points. Of course, that's a nice to have, but rather, are you helping us as a treasurer to make the best use of our cash? And especially if we have limited cash, access to cash, where can we find it before we go and borrow money? So in these strategies of favorable versus, let's say, unfavorable forward points, what I'm mostly interested is in the commercial opportunities of FX-based pricing that allows or that treasurers should take advantage of in order really to have that role within their organization. So in order to help the company improve in its commercial relationship, and when I say commercial, is with their clients, but also with the suppliers, because it's always a negotiation and there's always money involved. So first of all, making sure to have a solid and reliable forecasting system. We always have to go back to the basics. Forecasting, and of course the treasurer also can contribute in providing the necessary information and sort of tools to improve that. Once that forecasting is in place, I remember when I was working on the corporate side, I was more working in logistics, supply chain, and we had still, those that operate mostly in highly complex manufacturing organizations. They have something which is called the SNOP, Sales and Operation Planning. So it's salespeople sitting next to manufacturing, production people sitting next to those in procurement, and each one marketing, and each one has their own budget, their own forecast, and you have to harmonize them. So, and because at the end of the day, you either need money or you know where the money is coming from. So once you have this in place, evaluate the opportunities that FX pricing opens in the market dynamics of your counterpart. Because again, you might strike a better deal with your suppliers or with your customers if you are ready, to pay or to receive money in the local currency of the client. And just to say how important FX pricing is, I wrote a few years ago, as you said at the beginning during your kind presentation, that one of my areas of coverage is supply chain finance. And I wrote a report where basically I was making the point that FX, so the practice of FX, normally you would not consider it as part of a supply chain finance program. A bank that has an SCF program would not include FX within the portfolio of its solutions. But in reality, FX and all the tools and the practices is quite instrumental in making a successful supply chain finance program and schemes, because you can have the best solution to discount an invoice or to allow your suppliers to be paid on time or even before the invoice expiration date. But what if they want to get paid in euro and you are a US dollar company, or vice versa? And so when the recommendation I'm making to banks that come to me and say and ask, what kind of features should we have in our supply chain finance proposition, and also when I speak to sort of those who provide supply chain finance platforms, the fintech vendors, I tell them, do you have an FX capability there? And the typical answer would be, well, we have FX, but it's resident somewhere else. And I tell them, you should bring that within the overall picture or the overall portfolio, because that would augment the value of what you're offering. And so the possibility of having proper tools that allow you to anticipate or to decide whether it's favorable or unfavorable, again, it's something that certainly can help in the immediacy of that particular need, because at the end of the day, you need to cash in or cash out a currency which is not yours, so with all the inherent risks, but also making sure that that is not only a transactional, as you were, of course, anticipating before, is not to be seen only at a transactional level, but also as a complementary, a decision support system, as I like to call it, when maybe you as an organization want to endeavor in supply chain finance or trade finance propositions, where that component of the difference of currency is natural, because especially if you're trading with clients or suppliers, most likely they will be trading in a different currency.
Right. Yes. Look, you touched on so many points there. Pricing. So removing silos maybe between teams, right? The commercial and the finance team, but that requires communication skills, right, on the part of treasurers to be able to explain all of that. We like to say that they need to explain commercial teams why it is important, for example, to price with a forward rate in the event of, say, selling in a currency that trades at a forward discount in order not to lose money, right? Or if the contrary happens, if you sell in a currency that trades at a forward premium, maybe you should so hedge and take advantage of those forward points and lower your prices and become more competitive. And I think you're raising these issues there, that the importance of communications within the finance team and especially the treasurer, towards the rest of the organization. Enrico, what about a topic that is also really interesting to us? I'm sure you will have some important things to say about this. And to put it in context, a couple of hours before our discussion, we were talking to a former senior treasurer at IBM, and he was recalling former times when forcing customers to sell in to buy their products in US dollars right at the time of the Asian currency crisis. One day they faced a tremendous devaluation in the Indonesian rupiah, and what it meant to them is an enormous loss, right? Because then you have an element of credit risk in your accounts receivable. So how do you use currency management to be able to sell in the currencies of your customers and avoid these episodes of enhanced credit risk in your receivables?
Well, sometimes the problems are unavoidable. So if problems hit the fan, you will get them in your face. But the point is, the immediate answer would be as more as you can have an on time, or I wouldn't call it real time, because real time seems something that has to be done at the millisecond. I would rather say an on-demand, solution that allows you, based on your needs, based on your strategies, allows you to give the best information that can help you make a decision. So again, looking at the long cycle, the fact that that Indonesian rupee crashed, it's not something that happened. I mean, it happens overnight, but there might be some signs of it somewhere, before it happened. And so, again, considering the big picture, where the information, the measurement, when you know that you're operating in, let's say, potentially, risky countries in terms of, currency fluctuations, there are also those intangible elements that must be taken into consideration. This is where the real value of the treasurer, comes ashore, because that's where the treasurer is able to detect those feeble signs, those elements that are, presumably not connected, but they do have a solid, solid thread with the decision to be taken. Of course, the more you have a system that allows you not only to be capable from an operational perspective, but also is able to collect, detect, and analyze. I don't want to get into the artificial intelligence, conundrum, because I think that those things can also be done with a more, let's say, basic technology. But the possibility of collecting the relevant data and being able to analyze them, that's a real key differentiator, and that is what differentiates, the treasurer from the rest of his or her corporate colleagues. Because when it comes to, for instance, even deciding, again, I go back to my times when I was in working in operations, and we did have a very sort of clever corporate treasurer colleague who was able to speak, as you said, the business language. And so, I was responsible to finding maybe new suppliers or new even suppliers in terms of service, logistics services, for instance, warehouse, deciding where the next, manufacturing plant was to be established, or where to put, a new warehouse. And the typical, metrics we would use, it was, the distance from the client, the cost of the material. But since it was not my job and I had no understanding, I didn't know that I should have considered also factors like, currency risk or currency factors and how to hedge them. And so you need to have that. But of course, as a treasurer, you cannot go to someone who doesn't have your skills and start speaking about forwards, about points, about, effect. So, I would say the role of the business partner of a corporate user, in this case, say Cantox, is on one side to provide the necessary, solutions, but also helping that person to speak the business language, because many times in my experience, the real value is not so much convincing the person you have in front of you that he or she should be investing in a new solution. Is helping that person to build a case within the organization, to explain what are the positive impacts on other lines of business that are not necessarily related to finance, but that can benefit from a more efficient way of managing that thing that they don't know what is it, they don't care about it, but they might suffer if it's done wrong. So if the Indonesian rupee crashes, and and I insisted as a logistics that I want you to have all my warehouses in Indonesia, and I had a warning signals, but I didn't care because currency is not my business. My business is moving boxes, and if that was not properly discussed internally, then something that I would have considered so far away from my responsibility instead drops in my feet and makes me stumble. It's all about communication, and unfortunately, fortunately, depending on how you see it, the responsibility, the role is on the shoulders of the treasurer.
Right. Look, I agree 100%. We call that at CamTalks embracing currencies. In other words, speaking the language of currencies. It's a little bit like if you go to sell. You're a French company. You want to sell a product in Poland. You're not going to advertise in French, right? You need to use the Polish language. And mostly the way we would handle this would be to embrace currencies, to take ownership of the foreign exchange risk management and avoid this credit risk in receivables problems by selling in the currencies of your customers. And also maybe by contracting on the currencies of your suppliers, you would be in a position in certain cases to get extended paying terms. So that means, as you said, the link between foreign exchange risk management and liquidity management is always there. Enrico, let's take a look at the payment space, the business to business payment space. I read the other day the impressive annual letter by Stripe, and they mentioned that in 2023 alone, they added support for no less than 50 new payment methods, and that brings the total to over 100. So yes, that includes B2C, but B2B. So Enrico, we would like you to bring us clarity in this matter. What is happening in the world of B2B payments?
Well, it is a fact, and you already alluded to this, that the lines between B2C, so business to consumer, and business to business, B2B, are blurring. What happens also is the B2C user is almost always a B2B user as well. So the experiences, the expectations that you have as a consumer also reflected in your expectations as a business user. The point is that we know, what is important that banks and also solution providers are aware of is that the experience of a consumer, even though that same person is then a business counterpart, the expectation of a business user are totally different. First of all, because in a B2C environment, you have just, let's say, your counterpart is the user, is the consumer. And so in that case, the customer experience is giving them, a nice user interface, a nice set of apps that they can use mostly on a smartphone or a mobile device. When you get into the business space, business to business space, as we were saying before, you don't have just one counterpart. You have multiple facets of personas, treasury, payments, receivables, logistics, marketing, sales, IT, and each has their own budget, has their own needs. And so the experience when it comes to the business user is not so much having a fancy user interface, although that is a nice to have, but rather is being able to have that horizontal and end-to-end visibility of all the positions that are for which that person is responsible. This could be and has been somehow a limiting factor in the B2B space, that the consumer and B2C was much ahead in terms of solutions, in terms of devices, in terms of tools, while B2B still is in very much a focus on point-to-point connections, file transfers, Excel spreadsheets, and something more. But the point is that the business user, first of all, because as a consumer has that experience, but also because the financial institutions and also fintech vendors are constantly informing and educating the market on innovative technologies, on digitalizations, on the user experience. And so the more these corporate users become aware and informed of what technology can provide also in the business space, the more they expect to see tangible results and solutions.
Right.
So the point now it's many times I'm telling banks that say, we don't want to sell products, we want to sell solutions. I say, that's fine, that's a nice statement, but are you ready to speak the same language of your customer? If that customer is operating, let's say, in the automotive industry, and the way they manage payments, for instance, just most basic, if you will, B2B transaction, is going to be quite different, especially in terms of data that's going to be collected and exchanged, than if that same customer is working in the pharmaceutical industry or is working in a real estate industry. So the more you as a bank or as a fintech provider, you want to go and provide a solution to your B2B, so to your customer that operates in the B2B environment, you must be able especially to understand the business needs and the business problems of that, of your counterpart, in order to build, I would say, an ecosystem of solutions that maybe you need to aggregate also with other partners of yours to bring that solution to the table of your customer. And so the more information is exchanged, the more the expectation rise on the B2B side.
All right. Now I like this idea that you say B2B and B2C are relatively so well related one to the other, especially as the treasurer is also a consumer. Really interesting point of view. And to go real quickly, what about instant payments in the business to business world? Tell us what's happening and maybe the differences between the approach in the United States and in Europe with SEPA payments, and FedNow is the latest innovation there in instant payments in the US. Really quickly tell us what are the main challenges and what do you see in that space, instant payments?
Yeah, well, I would say, I don't know why the Americans are so good at complicating their lives, because the best thing they could have done, according to me, and not only for payments, is just look what the Europeans are doing, not because we are smarter, but just because we have such a more regulated environment that, if you see and come and see what the mistakes we have done in the past and how we resolve them, you're better off, being faster and quicker. But the situation is that now in the US, they have these two, sort of instant payments, the RTP and FedNow. And the major difference, I would say, is that the RTP is more like a centralized model. So in your sort of account-to-account transactions, you need to settle through a joint account that is held at the Federal Reserve Bank of New York, and you can have payments up to 1 million. While with the FedNow, that clearing is already done by the Fed, because the Fed is behind the FedNow, and the FedNow is more for low-value payment systems. So I would say this is the major difference. The instant payments in Europe, so the SEPA credit instant payments, they cover both euro and non-euro. And especially that you have sort of an execution time that has to be within the 10 seconds, right, plus another set of sort of elements that I would say just add the burden of complexity.
Right. Well, Enrico Camerinelli, the Senior Research Analyst specializing in supply chain finance, B2B payments. Thank you very much for joining us today in CurrencyCast. We've covered lots of topics. We started out with what's at stake in foreign exchange risk management in the context of B2B transactions. We discussed a little bit the alternatives in terms of the type of exposure that managers need to deal with. We went on to discuss also a little bit the B2B payment space. Now, Enrico, is there something you would like to add?
I would say, just to close the picture, I would pay attention to something that always pops up in conversations these days: embedded banking and banking as a service, because I do believe strongly that FX and FX processing is the best candidate to sort of implement and to build the use cases for whoever's looking at banking as a service propositions.
Right. All right. Well, Enrico, thank you very much for joining us today on Currency Cast, and we'll see you next time.
Thank you very much for having me with you today.